So it should work now. Sorry why I don't look in the chat. So I hope it's working now. I don't know why it's always changing here with the sound. Hope you can hear me now. So the reason why I say always look here for the important Fibonacci levels and look at the future prices is because you clearly see here the 4,000 points level. So this is an important mark because it's a round level, 4,000 points. And you see a 50% correction from this up move of 10%. And therefore, this one will be important. And I think that we will see some bounce here. And you see there is some room back to the 4,050 points level. So 35 points to the upside wouldn't be anything special. And we have even more room to the moving averages to 4,075 points here for the future. So therefore, I took a long position today pre-market in the Nasdaq future. We have seen Nasdaq future is a little bit stronger than the ES because we had a 20% move here, not a 10% move like on ES, and it only corrected 38% of its previous movement and not 50% like the ES. So Nasdaq is stronger than the ES future. Interesting to see because normally the Nasdaq is affected more by higher expected interest rate movements. Let's go to the interest expectations with the CME FedWatch tool. So there we see in 28 days is the next Federal Reserve meeting. Today we will see the Fed minutes at 2 p.m. Eastern time. So unfortunately I will not be able to live stream these because I have a local option trader meeting here in my hometown. This is at 9 p.m. my time. At 1 p.m. Eastern time it will start, and at 2 p.m. we will have the FOMC meeting minutes. So this can move the market, but we will always have to have in mind that these are old news. This is 2 to 3 weeks old, and yeah, but it can still move the market even if we had some new economical numbers which were more hawkish because the numbers were so good that we had a big shift in the interest rate expectations. So let's see the expectations for the next Federal Reserve meeting. And you clearly see that we have now an expectation of 21% for a 50 basis points move. Only 79% believe in 25 basis points from the current level of 4.75% up to 5%. And if you look back 1 week, so last week, we only had 12% expectation for a 50 basis point move. Now we have 21. So the expectation almost doubled. And this is a lot more hawkish here, the expectation, than it was before. And if this report with the meeting minutes is still a little bit dovish because it is almost 2 weeks old before all the economic data went out, it can be a little bit dovish or more dovish than the market is expecting at the moment. Then probably the prices can rise even more, almost for this 1 day. But let's see the probabilities for the next meetings, because there we see there are still 75 basis points to go to Fed pivot. And Fed pivot is now 5.5%. It's pretty high because the previous pivot was expected to be at 5%. And now we are 50 basis points higher. And the high point will be not before June. So for the next meetings, we still have expectations of 25 basis points move. 3 times 25 basis points move. So this is a high expectation. This is the reason why all the bonds like TLT ETF went down, because of higher interest rate expectations. And therefore, all the bonds at the markets have to go down with their price levels. Yeah, that's interesting to see. So as soon as the words from Federal Reserve Board are meant to be dovish, then probably the interest rate expectations will drop and the market can rise again. So let's see what will happen there with Nasdaq and with ES future, but for now they are rising. So I took a long position at 12,100 points. My main target here will be 12,250 and above. So I will close half position here and the rest here between 12,300 and 350. Let's see where this level will be. My stop loss is right below the low of the day here, and low of the day is 12,062 points. So I have a nice risk to reward ratio, but it's only a small position because I think the main trend is still to the downside because we broke previous low, and therefore this should be taken as a break of the uptrending pattern here. Okay, let's see some stocks like Tesla. Where's my Tesla chart again? Here. So if we see it on a week chart, we see it's still uptrending, but this week could be the first week for the last 6 weeks, which will be red. If we end below $200, then this week will be red. But you see that we are still in the sideways trading pattern the third week here now. So the high point was $217.65, and we are still fighting for the $200 level. Nothing special because it is an important round level. We have some room to go to the 230, but normally we take some time because this is a major resistance level. You can see that it was a previous low point here for several weeks and acted as a support, and now it acts as a resistance. So nothing special. We can still pull back to $175 or even $150, and it would still be uptrending here on a weekly time frame. But if we look back further, then you still see high point, lower high point, lower high point. So it is still in a downtrend here on a higher time frame like a monthly chart, because here you clearly see higher lows and higher highs. And yeah, therefore it's an uptrend within a downtrend on a higher time frame. So be cautious if you trade Tesla. We still have a lot of movement within the stock, but the implied volatility is still good. So I have taken a bear call spread. I was talking about this in previous live streams. 250 strike short call, 270 strike long call. This is a bear call spread. And as long as we are trading sideways here, I can still make money. Natural gas, let's go to the futures. Natural gas is still downtrending, so we almost reached the $2 area here with April future. Low point today was $2.11. Now we are rising 4% to the upside, nothing special for natural gas. It went down more than 6% yesterday. We still have some room to the upside, but you can clearly see for the last weeks we were downtrending below the 9 EMA, below the 20 EMA level, and the parabolic also went to a downtrend. So you clearly see here ADX is showing a strong downtrend, but it can change. We will probably see soon some bounce to the upside. And yeah, I'm still speculating on this. I have two $1.50 strike short puts, so I sold at the money. And yeah, time is in my favor, but I don't want the market to drop more or I will have to close my position. But I'm still little bit bullish on natural gas. I just want to see a smaller bounce here to the upside, back to the $273 area, and then I can probably close with a profit here my natural gas position. And we have a look at crude oil. Crude oil is here. Crude oil is downtrending again in the previous days. You can clearly see that we had this high point area here between $82 and $83 for the April future. And you can clearly see a nice pattern. It's a shoulder head shoulder formation. This was a first shoulder around the 81, 81.50 area. Then we had a higher high point. This is the head at the $83. And this is the second shoulder. You can see it's a little bit lower than previous shoulder, but it's about 82. Yeah, the high point was $80.78. So this is the second shoulder. And now look to the downside, to the neckline here. This is the neckline. We had two low points here. One low point at $72.64 and one at $72.97. So around the $73 is the neckline. So probably we will go down to the $73 area and see a smaller bounce. But as soon as we break below this $73 area, we'll see more selling pressure. You see there's a previous low here, a lower low of $71. So we have some room to break below. These $2 would be 2.7% to the downside, and then 70% chance that we will see a bounce back to the $73. And there you could retake a short trade. So wait for the break of the $73 to the downside. You can take this as an early short, close it as soon as we reach 71, wait for the bounce back to the $73 and reshort it, because then it should act as a resistance. So this is a nice pattern here now with this shoulder head shoulder formation to be clearly visible on a day chart. And let's move on. German market, the DAX 40. We still see that there's not a weak market like on the US market with S&P 500 or Nasdaq. It's still trading sideways. Yes, it's a little bit red this week, but you can clearly see that we are still uptrending. And this is not no 38 or 50% correction like we have seen on the US markets. So if we go back to the previous lows here from December, you can clearly see that we only corrected 23.6%. So, and we are even not at the lows here from this week. So it is pretty strong here for the European markets. We were talking about this in the previous streams. We have some room to go back to the previous high points. And EURUSD was also indicating this, that there were some outflows of the US dollar and inflows in the euro here until the beginning of February. But since then, you see the US dollar was getting stronger and stronger. We were in the sideways trading phase, tried to retest the lows and got rejected, went back with a hammer, but are now trying to retest the lows again, and it's slightly going lower here day per day. So it's not a good sign for the stock market overall when the money flows back into US dollar as safe haven. And let's see our commodities like orange juice. Orange juice had a big correction of about 50% to the downside. Let's see this again here from the breakout level here at the 205 area. We had a correction of 61.8%. Went higher here. We still have some room to go to the upside here before I would short it again. Maybe even close this previous gap here at the $2.52 and then go lower. So I would wait for a smaller short here or a bigger short at this area and then short it again to the downside. Yeah, do you have stocks you want me to analyze? Then write them down in the chat and then I can see what I can do. We have Palantir. We spoke about this in the previous week, and I said, yes, we have a big gap here. So of course there's some potential because we broke the previous high points. As you can see, this was a big daily green candle. But here you can see on Thursday last week, we had a higher high point here, but we closed a lot lower. So we had a huge wick on the upside. This is never a good sign. Making new highs but closing low with such a huge wick here like last Thursday, this was a clear sign of weakness. And now you see Friday was red, Tuesday was red, so Monday was closed, Tuesday was red, and today we are opening red again. So there's some more room to go back to the $8 area because you see previous high point were here. So this should act as a smaller support, but we still have the open gap here back to the $7.75. So $7.75 and $8 should be a supporting area. But I think that we will go back to this area before we go to higher levels. So a closing or half closing of this open big gap here is pretty, there's a high chance that we will see this. So there was someone last week who wanted to buy at the $8 area. You will probably get a second chance. That's what I'm saying. There's always a second chance. Never run after the stock or a tram because there will always be a second chance to catch it. Yeah, which stocks do you have? Let's see, Apple. Apple's also downtrending now below this sideways trend here. We are now trying to retest the 20-day EMA level. As you can see, we closed right at the 20-day EMA, but it's weak again today. And this is one of the heaviest weights in Nasdaq, so it's not a good sign if Apple is pretty weak. For now, it's only minus 0.2% today. But yeah, it's a clearly psychological level, the $150 level. We are trading below. We closed below yesterday, so it's not a good sign if we close below the 20 EMA level, and there would be more downside potential to the next Fibonacci here, 76.4%. This is a $144 area, so we would have still some room to the downside. But you can also redraw these Fibonacci's because we had higher high points here. So let's just redraw it and see the new levels if we use the previous high point here and the low point from January. So this is here. So then we have the $145 as the previous breakout level, and this could be the next correction level if we close the week below the $150 area. then there's some more room, $3 more room to the downside to go to this $145 support level. Gold, let's see gold. Gold was downtrending because of the higher expected interest rate level, and you can still see it's now sideways trading for several days, but it's still weak. So I don't think that gold has a lot of upside potential as long as the Fed is hawkish. But if the report today is more dovish or is really dovish, then of course gold has some upside potential, but for now it's not looking really bullish for gold, and it can still trend lower. Let's see WIX. WIX was uptrending until yesterday, and even before the market opened we had high of 23.6 points today for WIX, so it's a pretty high point. If we look back at it on a weekly time frame, we see the $24 area is an important area, of course, but we have more room to the upside up to the 30-point area and higher. If there's really fear coming up when the markets are dropping, then there can be more upside potential here. So I have a small long position on WIX just to cover my long stock positions and my short put positions I have open, just to be prepared if the market is dropping further. But yeah, it's not a big position here in VIX because it's just inversely correlated to the stock markets. When the stock markets are rising, then VIX should drop. When the stock markets are dropping, then VIX should go higher. Could you also talk about Amazon? I went long Amazon yesterday. It retraced 61% from the lows, is Atif's question. Yes, let's see Amazon. So let's use this Microsoft chart and talk about Amazon here. So we had a high point here on the earnings of what was it? No, it's what was it for date? Yeah, February 2nd. So let's see it on a bigger time frame here. And then we went low. So it was a breakout, as you can see, with a big up gap. But then on the next day, we closed this gap already and are now trending lower. So we corrected more than 23.6%. Try to retest now the previous support level. So now it's acting as a resistance. As you can see, it's not a good sign if we close below. But yeah, probably there's some more room to the downside. Next support would be here around $92.50, the previous lows here. But for Fibonacci, we have even more room to the downside. So if I would redraw all the Fibonacci levels from the previous high point to the previous low point, you clearly see the next support is here at $93.80 and below these low points. So this is a supporting area between $92.50 and $93.80. But then if we break below $92.50, the next stop would be here around $89. So there's some more downside potential, and it could also form a shoulder head shoulder. So this could be a clear head here. This is the first shoulder. So maybe this is the second shoulder. It's a little bit higher than the previous shoulder, but it could form a second shoulder. If we don't go above $97.50, then probably we will see lower prices, but it can end in a sideways trading phase. Like here, we had about 6 to 7 days sideways trading. So now we need more sideways trading here, and then a break below the $93 area to form lower lows, and then back to the neckline at $92 and lower. And then let's see what will happen here, but this could also end in a shoulder head shoulder formation for Amazon. Not looking pretty bullish, so I would wait. If we want to take on a long position, I would wait for the break here of the previous highs at $101. Then it's looking more bullish, but as long as we don't break these previous high points, it's not looking really bullish. Okay, this is just for the important price levels for our important stocks and commodities. So let's go back to the economic calendar and see what will happen this week. So today, Wednesday, we will have FOMC meeting minutes at 2 p.m. Eastern. Unfortunately, I'm not at home to live streaming it because I'm at my local option trader meeting here in my hometown. But of course, we will talk about it tomorrow, because tomorrow, 1 hour before the market opens, we will have more economic data like GDP, initial jobless claims like every week, and crude Crude oil inventories is normally on Wednesday because Monday was a holiday. It's this week on Thursday, but GDP will be the important economic number tomorrow, and I will live stream it for you 1 hour before the market opens. So be prepared for this. The market can turn again. And on Friday, we have core PCE price index 1 hour before the market opens. I will also live stream this one for you. And new home sales half an hour after the market is open. Also a 3-star event. Let's prepare for next week. Next week, Monday, pending home sales and core durable goods. On Tuesday, CB consumer confidence half an hour after the market is open. And on Wednesday, ISM manufacturing PMI half an hour after the market is open. And on Friday, ISM non-manufacturing PMI half an hour after the market is open. So some more news to come here, which can be important. But for this week, let's focus on tomorrow, because tomorrow we'll have GDP data, and this, of course, will also be important for the Federal Reserve and for the next Federal Reserve meeting. So we will see what will happen on Fed meeting minutes this afternoon for you, or the evening for me. And I will live stream tomorrow again, 1 hour before the market opens, and we can analyze what happened and what the market turned to. I'm in a small bullish position, but it's overall in a short trend. So always keep in mind that it's not too bullish to be too long in your long position if you have one. No investment advice, just talking about what I'm doing right now. But yeah, never hold too long to your position if you see that you are trading against the trend. So I wish you a nice trading day. Hope you have some profits, and please like my live stream if you liked it, and subscribe to my channel if you want to see more. And let's meet tomorrow again, 1 hour before the market opens. See you tomorrow. Goodbye.